Good morning, traders. It is 8:03 a.m. Chicago time, 9:03 Eastern U.S. time on Thursday, the 8th of June, 2017. It is rollover day in the U.S. Many of you are probably going to hold off until tomorrow to roll your U.S. futures contract in the indices as volume switches over, but my data feed and my charts roll over today, as does the exchange. So from this day forward, we'll be talking about the September 2017 contract. You'll notice the prices on my chart do not reflect what they were yesterday. They are adjusted down in the ES by 2.25 points. So the all-time high, just for you to verify, the all-time high in the ES in the September contract is 2,424.37.50 instead of 24.39.75. Okay. So that's an important thing. Derivative trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Overnight, we got quite a few releases, the key of which is the ECB. We also got the Eurozone Q1 final GDP came in stronger at 0.6 versus 0.5. The market is slightly higher today than it was yesterday. And the ECB's announcement, it left rates unchanged as expected. The statement amends its forward guidance, removes lower on interest rate outlook, and overall, there's not too much there to report. Draghi says he sees interest rates at present level well past end of QE to preserve favorable conditions needed. This was stated in his prepared remark. Draghi did not vote on language change, did not hear any dissent either. And Draghi says could still cut interest rates if necessary should the situation worsen. We also got initial jobless claims about a half hour ago, 245,000 versus 240,000, so slightly worse. Continuing claims 1.917 million versus 1.92, almost in line. As far as what we're looking out for today, we have the British election, the UK election coming up. The results of which will be streaming throughout the day. The final results will be released at 11 p.m. UK time. 11 p.m. UK time. That's 6 o'clock or 6 o'clock. What is it? 6 o'clock Eastern, 5 o'clock Central. That's when we find out who has won. Is it May or is it Corbyn? And that may have an effect in the overnight trade. So keep an eye out on the reopen. I mean, the final results will be in right when the futures markets reopen for the Friday session tonight at 6 p.m. Eastern. I'll be at my desk watching. As far as what we're expecting today, looking for EI natural gas at 10:30 Eastern. 99 is the expectation. At noon, we have this U.S. household net worth for the first quarter. I have not seen that number before, I don't think. And then, of course, as I said, the UK general election today. We're getting the Comey testimony. He testifies in front of the Senate Intelligence Committee today at 10 Eastern. For those who don't know, Comey is the former FBI director that was fired by the Trump administration, and he is testifying on some potential irregularities or some things that happened. This is something that the media is feeding off of right now. It could have an effect. It is the reason we had that drop on May 17th. May 17th, we had that gap and run lower, and that was based on the news that Trump had asked Comey to chill with the investigation into the Russian hacking and collusion with Russia. So a lot of politics there. We'll see how that plays out. It'll be interesting to watch, but we'll keep an eye out. Again, 10 a.m. this morning. As far as what we expected yesterday versus what we got, yesterday's expectations were pretty straightforward. Was looking for a push higher. I was looking for a market to rotate higher. In June prices, we were looking for 24.37 and a quarter to be attacked yesterday, and was looking for the market to sit sideways in the upper distribution in this heavy distribution up here. That's what I was looking for that to be a magnet to trap price for the day, and I was looking for today with the ECB and so on to take us up through the 24.40 level. That didn't quite happen. Um, the secondary, there would be no pullback. The market would go into an open auction. Um, would go into an open auction and get a drive and push up. Hang on. Would get a drive and push up and then hold steady for the rest of the session, just go dead for the rest of the session. And then the tertiary hypothesis was for the market to push up towards 24.34, the prior day's IB high, stay inside of the range, and then blast downwards towards 24.15. Um, 2414, 2415. This is basically what happened. Did not quite follow through all the way down. But yesterday, remember these prices that I'm showing here are going to be off by 2.25 points. And so this is the open auction right here. We had a very tight open auction. The market pushes up into 24. In the old price is 24.3450, and then it rotates all the way down to 24. I believe what was it, 24.23 or something like that on the low, and then it started to drift back up. So up to this point here, we had hypo 3. And then we got the usual upward drift. If you recall yesterday, I talked about the fact that if you're short and you catch a run, do not overstay it because the market tends to take it all back later in the session anyway. We ended up yesterday going neutral, so we dropped through the IB low, and then later we popped through the IB high, making the day neutral. The things that we should recognize from yesterday is this clean, clear taper at the bottom of the profile. As prices went down, there was less and less interest. There was less and less interest on the sell side, and what this represents is an excess low. This looks like an excess low, and this could be a good base for continuation higher. For those who attended the AMA with Futures IO yesterday, I talked about the action. I talked about the fact that we pushed back and we held our value inside of the prior value of the last 3 days after testing lower. So we checked below water, right? We popped our head below water, came back up. The expectation is we continue higher into 24.34 and then start tackling the all-time high at 24.37 or so. Okay, so that's how things are setting up. Looking at the overnight, we get the drift. So market opens during the Asian session, does not do anything at all. We get the drift up later in the session. We get the pop up on the European Open, and the market's holding above the point of control, above the mid, above VWAP on the overnight, and has poked through the prior day's high. It is holding steady. It looks bullish to me. Overnight inventory is long in the price and in volume. And that's how we're setting up this morning. So there's not much to talk about here. I am looking at the September contract, and it only has 17,000 contracts traded in it, which is incredibly low. It's almost, what is that, 12 or 13% of what we would normally get. So we can't believe those numbers. The other thing we cannot take stock, we need to take stock of and pay attention to the fact that it isn't going to be very accurate is the volume delta. The volume delta today and over the next week is not going to be representative of what is actually happening in the market because of rollover. So as people roll their contracts, so if you're long June and you want to move your contract into September, what do you have to do? You have to sell your June contract, so you're creating a negative delta in June, and you're creating a positive delta in volume delta in September because you're going to buy September. So there's no, the aggressor in this case is not really taking a position in the market, so to speak. The aggressor is simply rolling their contract, but their action on a calendar spread or outrights is showing up as a positive delta in one contract and a negative in the other. So those numbers are not going to be representative of what the real market sentiment is or the aggression is in the market. This morning, I'm looking for, since we're opening higher, it's the usual. I'm looking for we're opening in a range out of value. I'm looking for the ideal situation, and the most probable situation is we start to move towards the prior day's point of control. We find a base. We're looking for something to lean against on the long side, and I'm looking for to start pushing higher into the 24, 34, 25 for the first test. That's the MC point of control. And then 24.35, which is the old 24.37 and a quarter. And then I'm looking for a potential push into the all-time high in the September contract, which is 37.50. Okay, and so that's hypo one. Hypo one, again, just like yesterday, is bullish. The market is set up for this. Yesterday's test below the range, below this MC range, is a clear indication. I call that a boulder in the foundation for the next move, and it's likely to be up. Okay, that's the primary hypothesis. Secondary hypothesis, open auction. We get our early buyers. They get exhausted. We start to reverse back, move into the point of control, test all the way down into the 27 area, and then hold somewhere in the middle into Friday's trade. This is hypo 2. That's an ugly 2. It looks like Sanskrit or something. There we go. That's the secondary hypothesis. So the most likely idea is a small drop and a pop higher, and then we're back into the MC point of control, tangled for most of the session, looking for that to break into 37.50. That's the primary hypothesis, okay? Those of you who are at stage 5, we do not have an AMA webinar yesterday because I did one for Futures IO for the public yesterday. And also just remember, rollover, starting today and into next week is a very choppy trade, traditionally or historically. Again, we've been in a pretty awful market, in my opinion. I hate to be a Debbie Downer, but it's true. And we're going into rollover, and it's likely to continue to translate going forward. So prudence and patience are going to be tested over the next week or so. You might find that you're not performing as well as you have, and you're probably having doubts and things like that. This is normal, as traders will go through that consistently. I suggest you listen to yesterday's AMA when it's produced. Cover a lot of that in that discussion. Good luck today. Take care.